Welcome Crypto Criticals, where we provide critical news and information for your financial success. Please subscribe and follow our channel for more critical information. So let's start our video. In the last few days, things have been pretty exciting for Terra Luna Classic as it got close to a major milestone implementation. Since the crash in May, people have been worried about the large amount of Luna Classic on the market. This is what the 1.2% tax is meant to fix. Unfortunately, many Luna Classic and potential traders may not know the 1.2% tax, so here's a quick explanation. All Luna Classic transactions on the chain will be taxed by 1.2%. This includes interactions between the wallet and the smart contract. But Luna Classic trades that happen on exchanges might not be subject to the tax. The idea behind the tax is that it will help stop Luna Classic from having too much of it. The coin price went up by about 160% in the last 7 days. At the time of press, the cryptocurrency had already dropped by 16.77%, which shows that people were already making profits after the market became overbought. But its downside might not be too bad, since the tax and burn mechanisms already make it easy for many capitals to come in at lower prices. Also, Luna Classic is getting a lot of new social activity right now. This has been the case in the last 2 days, indicating that more traders are paying attention to what's happening. This could lead to more people buying Luna Classic and lessen its downside. The weighted sentiment metric for Terra Classic is trying to move a lot more in favor of the bulls. Now that investors are getting more interested in Luna Classic, these changes could push the network into a strong phase of building up. After falling sharply for almost 2 weeks, Terra Luna Classic is back on its feet. On the other hand, Terra Luna Classic is trading in a bearish pattern and shows no signs of a bullish reversal. Changed on September the 23rd at 5:30 p.m. UTC. Binance confirms that users can click an opt-in button to pay a 1.2% tax when trading Luna Classic. When the opt-in accounts reach a holding of 25% of the total Luna Classic held on Binance, we start to charge 1.2% tax for all opt-in traders when they trade Luna Classic, the blog post says. Updated on September the 23rd, at 1 p.m. UTC. Changpeng Zhao, the CEO of Binance, said that instead of a 1.2% tax burn, another option could be to implement a feature that lets users opt in for a 1.2% trading fee for a burn. The Luna Classic network has successfully added a 1.2% tax burn to all on-chain transactions. The new system started at a block height of 9,475,200 on September the 21st, after a controversial vote by the community. The tax burn will continue until there are 10 billion Luna Classic in circulation. Right now, there are 6.9 trillion Luna Classic in circulation. In May, Terraform Labs stablecoin UST and cryptocurrency Luna both crashed. The price of Luna dropped by more than 99.99% due to a death spiral. Since then, the founder of Terraform Labs, Do Kwon, has tried to bring the ecosystem back to life with Terra 2.0. He hasn't taken any blame for the crash we just talked about. South Korean authorities issued a warrant for Do Kwon's arrest last week, saying he was on the run. Do Kwon has said that these rumors aren't true, but he hasn't said where he is. South Korean prosecutors have said that these claims are false, and that Do Kwon is not helping the police, and has no plans to show up to be questioned. They have asked the foreign ministry to take away his passport because of this. Since September 8, when Luna Classic hit a high of $0.00059, it has been going down. The high was made where 2 important fib levels met. The 4.2-4.618 extension of the first upward movement, and the 1.61 lengths of waves 1 and 3. So, it was thought that it would be a big local top. The constant drop brought the price down to $0.00024 on September the 15th. The low and subsequent bounce helped to confirm the $0.00027 support, which is both a horizontal support area and the 0.618 fib retracement support level. The daily RSI has also bounced off the 50 lines, so if Luna Classic doesn't close each day below this level, it's likely to start a big bounce and possibly continue the upward trend that started on August the 15th. Since September 9, Luna Classic has also dropped by a lot, by 66% so far. But unlike Luna Classic, it doesn't show any signs of going up. On the other hand, the price has made a series of lower highs, which is a sign of weakness that supports the downward trend. Also, the 6-hour RSI is below 50, which indicates that the market is likely to break down. If Luna Classic falls below its current support level of $2.60, the next closest support area would be at $1.60. In just 24 hours, Terra Luna crypto went up by more than 200%, while Terra Classic went down by 16%. There's a recently approved tax burn for Terra Classic, affecting the prices of both Terra cryptos. The tax burn has benefits and risks, and it's still too early to say what caused the difference in price between the two cryptocurrencies. The cryptocurrency with the biggest loss this morning was Terra Luna Classic. According to data from CoinMarketCap, it lost about 16% of its value in the last 24 hours. On the other hand, the Terra Luna cryptocurrency went up by 202.96% in the last 24 hours. Even though the two events have nothing in common, the price of both Terra cryptos may be affected by how crypto exchanges feel about the newly approved Terra Classic tax burn proposal. The blog post says that the tax burn proposals number 3568 and 4159 have been approved. The main idea behind these proposals is that on-chain activities would be taxed, and the tokens would then be burned. Users trade on-chain in decentralized exchanges like Uniswap, PancakeSwap, and Curve. So, the proposed taxes will be used when trading Terra Classic. Terra's developers have made it clear that activities that happen off-chain, like trading on centralized crypto exchanges like Binance, Coinbase, and Bay, are not taxed, with a few exceptions like moving tokens from a hot wallet to a cold wallet and others. This is because those activities involve on-chain, so they will be taxed. The Terra Money blog said, this parameter change can tax off-chain activity, like trading on CEXes. However, that activity can and will be taxed and burned, depending on how these trading exchanges work, like moving from hot to cold wallets. Trade and Crypto KuCoin also said they would support tax burns, but only for deposits and withdrawals, which happen on-chain, and not for trade transactions. In the same blog post, the people who made Terra discuss the pros and cons of the newly approved tax burn proposals. The developers hope that by putting this new proposal into place, the proof of community-driven governance will be shown on-chain. Developers think this event will get more small investors interested in their ecosystem. Centralized exchanges couldn't think about an off-chain crypto burn transaction until the burn happened on-chain. Once the burn happens on-chain, centralized exchanges will think about it. Developers think this taxing event and the subsequent burning of the token could hurt economic activity and utility in the long run. Some decentralized applications already in use but won't work with this tax burn proposal won't be supported. So, people who used to use them will no longer be able to. Developers think this new tax could make the remaining liquidity move off-chain to crypto exchanges that don't tax, making it harder to get new venture capitalists and investors in venture funds. The CEO of Binance CZ said in an AMA on Friday that Terra Classic's Luna Classic 1.2% tax burn for off-chain transactions is not possible on centralized exchanges like Binance. He also thinks users could choose to have the 1.2% tax burn happen. This will also show how many people who can vote agree with the tax burn. Now, Binance has announced that it will add an opt-in button for a 3-step process of adding tax burn to Luna Classic trading. Binance adds rules to Terra Classic's 1.2% tax burn, Luna Classic. In an official announcement on September the 24th, Binance suggests a 3-step plan for putting the 1.2% tax burn for off-chain Terra Classic transactions into place, Luna Classic. Here's what to do. Step 1. Add an opt-in button that lets people agree to 1.2% tax on their Terra Luna Classic trading. Step 2. All opt-in traders will have to pay a 1.2% tax when the quorum reaches 25% of the total amount of Luna Classic on Binance. People who don't vote won't have to pay an extra 1.2% tax when they trade Luna Classic. Step 3. When the opt-in traders reach 50% of the total Luna Classic trading volume on Binance, a 1.2% tax burn will be put in place for all traders. It will stop Luna Classic whales, who don't often trade, from swaying votes. But if the 25% mark isn't reached within a month of an opt-in button's release, Binance will take it away. Some think Binance CEO CZ made the right choice by letting traders decide how much tax to pay on their trades. Some people think it's important for Binance to support the 1.2 tax burn because it makes up almost 35% of the Luna Classic supply. In a tweet, Terra Rebels member X said, "CZ, I think we need a bit more information here. How would this vote fit into the bot percentages? In reality, a good amount of volume is made up of bot trading. How would this make it fair for manual retail traders to get between 25% and 50% of the vote? Binance CEO CZ thinks that a 1.2% tax burn will make blockchain use cases pointless. Also, if fees go up, people won't trade as much on Binance because they won't be able to afford it. Binance has already put the 1.2% tax burn on chain transactions into place. The price of Terra Luna Classic went down after Binance's CEO said that tax burn for off-chain transactions would not be implemented. Thank you friends for watching our videos. Please tell us in comment box how much you liked our videos. For more videos please like, comment and share our videos.